Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, December 28th, 2018. I wanted to get a quick video out. I just returned back from vacation and want to apologize for not giving more of a heads up. I think I made mention a few days before I left. This is the first year in many years that my family and I didn't have plans set in advance to travel anywhere. We kind of last minute thing with some family coming into town who was going to Epcot Center and some of the parks up in Orlando, so we did that. So anyways, I took a couple days off, and of course, as Murphy's Law would have it, missed one of the biggest days in years, one of the best bear market rallies. I think the stats said since 2009. But again, that's what I've been expecting, and that's what a bear market rally looks like. So, unfortunately, on the official trades we had, we were literally just a day too early in the stops. But sometimes that's what happens. And I know quite a few of you in the trading room. I know mentioned leaving some positions on. So, congrats to those that did. And I just wanted to share my thoughts as we head into the weekend here. I do plan to do an additional update, answer all questions, comments as I catch up again from taking some time off for both the holidays and a quick mini vacation. So let's dive into the charts. Um, the This is QQQ, or I'm sorry, the NQ E-mini futures 60-minute chart. I wanted to start here. There are potential divergences, and I made some comments. I'm trying to recall what I made in the trading room the last couple of days versus the front page. I think it was in the trading room. I cautioned against shorting into rips at this point because it seems to me not only have I been expecting it, but now we've seen a change of character in the markets, and that's just really the driving theme right now. I'll get to the daily charts of QQQ and SPY in a second, but the last few days, the rally that we had. Let me get to the daily charts in a second, and then I'll talk about what I'm seeing here. But I believe that we were in a period of forced selling, which I believe was overdone. And I want to be careful with my words because I know there's a lot of confusion on this. I think it's overdone for the foreseeable future. I still do think that the market most likely topped back in early October or so, and we'll probably not take out those highs at least for a couple years, maybe several years or more. Anything is possible. I'm open to all possibilities, but that's my overriding factor. Now, however, with as much as we've fallen, you can have a rally, as I said, expecting, measuring to the double digits, and so far we're, just well, heck, the other day, what was it, Wednesday? We're, half. What was it, Wednesday or Thursday? Yes, Wednesday. Sorry, that's what happens when you're in vacation mode. You kind of lose track of the days. So that rally on Wednesday was pretty much put us halfway there. I think the QQQ was up over 5% or so. Um, and now where I'm going with this is I think the market, as often, or actually is almost always the case during a correction and during strong rallies, it overshoots. Strong rallies tend to overshoot to the upside, and strong corrections tend to overshoot to the downside. So therefore, I think there's going to be some more upside. And most importantly, I think what we were seeing for the last couple months was a lot of forced distribution. Everything I talked about before it even happened about pension plans, various hedge funds and mutual funds that are balanced, take a balanced approach, having both being hit with redemptions from the overcrowded FANG trades and overcrowded indexing trades, and also a lot of the institutions trying to rebalance and square off and cover up their risk exposure as they were too heavily allocated towards stocks. So it all happens at once. It's a factor of all those things, the excessive margin interest that we had in the market, and everything else. So the fact that what I saw on Wednesday, at least checking my cell phone when my wife wasn't looking in the parks, and then of course what happened yesterday, as I expected, I posted when we were down pretty sharply, that I think it was a buying opportunity. Put that out there for everybody in the trading room, and sure enough, they bid that correction down early in the day, bid it up hard to the close. And again, we'll get to that in just a second. So that's what I'm seeing, and that shows me that now the market is back in accumulation mode. It's as simple as that. As I said yesterday, I think it was last night in the trading room, 2 days does not make a trend. But so far, let's see, day 3, and we're up again. we're starting to get the early makings of a trend. And again, it's more so that the forced liquidations, forced redemptions, every little bounce we were getting for the last few weeks was getting sold into, and now the dips are being bought into. So that shows a change of characters. I wanted to point this out. These are the NQ 60-minute charts right here, or this is the NQ 60-minute. I'll get to ES in a second. So you can see some potential divergences, but my belief, and from where we're at, if I'm correct on what's going on now, I would caution against shorting rips at this point and trying to game any pullbacks on the short side. I think we're probably at least several weeks, if not more, away from adding back on swing trades that might be, multi-week or multi-month swing trades. There will certainly be some opportunities to game some quick pullback trades for active traders, just like when we were going down for the last few months. There were plenty of opportunities to go long if you're a very active trader. But as far as swing traders, 10 traders, everything I've said over the last few weeks, what I've been doing is continue to move money into long-term funds, 401ks, IRAs. Did a little more of that today. And at this point, actually, after today, did my last lot. I'm pretty much it's exposed as I want to be on the long side, which is close to 80% or so, probably, if I looked at everything. All right, so I did want to point these out, and we'll monitor these. But what I think will happen is, just like the divergences on the downside were burned through, we did have, if you look at the 60-minute chart here, you can see there's bullish divergence that never was taken out on the RSI. So we still had a divergent low. We had divergence here, here, here. It just kept extending. They took out the RSI or the PPO divergence down below, but they did not take out the RSI divergence, and they didn't do that on the daily charts of QQQ and SPY either. So this is what we're watching now. It is a small rising wedge type pattern, but it certainly has the potential to grow and even keep these divergences intact. But as of now, like I said, and I may be proven wrong. That's one thing with trading or investing. The only guarantee I'll ever give you is that I will be wrong at times. So that's what stops are for. Don't get married to a trade. So if they turn around and dump it, and we happen to take out those lows, which I really don't think is going to happen anytime soon, at least not for 5-6 weeks or more, most likely, would be my guess. But if they do, just keep your stops. I'll try to give you some levels if you are trading. Well, I'll put back up probably another official long trade on QQQ and SPY or IWM. Again, I mentioned last night in the trading room. I think they look good now, and I would use the same targets on those previous two official trades. So we'll watch these wedges, and here's a trend line to watch. I'm more concerned about the an uptrend line being broken. But again, if it happens soon with the market in accumulation mode, once everyone realizes it's safe to get back in the water, which I think is happening now, be careful. I think a breakdown would probably just be met with a lot of buying, and so for the time being, unless something changes, I don't think it's worth shorting at this point. But if you do think if you do think so, and you want to short this wedge or breakdown like anything else, just use a stop, and you may catch a runner trade. Maybe this catches everybody by surprise and the market goes down, makes a new low. So that's NQ. Let me get to ES, and then we'll quickly get to the charts, the major indexes. Yes, same story. Oh, and I didn't mention on NQ, which I showed a second ago, you could probably see I had there a downtrend line, not super well defined, which traded through it a little bit, but it looks just like this one on ES. We have 1, 2, 3, 4 reactions. We broke through and back tested. So I'll jump back to NQ in a second and show you that. So watch that as well. So there was a downtrend line. This is ES I just jumped to. ES, as with NQ, still had the divergence on the 60-minute RSI. You can see there, and we recently broke out and back tested this downtrend line. There's that potential wedge and a potential uptrend line to watch on ES. And just to jump back to NQ again, this is a downtrend line, so you can see same story, several reactions. So looking good, and we'll start to come into some resistance. As I was saying before, as we're heading down, and it's still the case, there's still a lot of work for the market to do. There's still a lot of overhead resistance levels. So what I expect is we're probably seeing you know what, I'll get back to you on how much of this move. We'll look at the targets. We'll jump out to the daily charts in a second to look at targets, but expect things next week maybe to slow down. Maybe not. I've seen sometimes when you get so oversold, you have maybe a week of straight gains in the market, pretty impulsive buying. Let's jump out to the daily charts, take a look at those. Okay, this is SPY daily. There's that primary uptrend line, which was long since broken. And you can see yeah, I'm sure you've watched the market in the last few days, just how impulsive the buying was, especially on Wednesday. And again, yesterday, this is what I was talking about when I was stepped away during a lot of hoofing around at Epcot Center. We were down at some point in the morning. Was it? Yeah, that was right here. This was yesterday's move over here. So there was yesterday's open, and you can see from there's where we closed the day on Wednesday. So at Thursday, at one point, we were down about 3.5%, and that's somewhere right in there. I came in and posted. It just I expected after the big sharp rally on Monday, you're going to always have doubters. I'm sorry, on Wednesday, always have doubters and people that are just like buy the dippers when the market goes up, 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 up. They keep buying the dip until they learn that buying the dip doesn't work. So you have people that were shorting the rips, and I'm sure that rally got shorted. Anybody who happened to catch it took profits. So this was a great entry there. And again, I wish I was in front of my computer. I would have put out an official trade, so at least some were able to catch it in the trading room. And now the point I'm trying to make here, that is a big down day for QQQ. From the highs over 3.5%. And the fact that they ramped it up shortly after 2 o'clock to recover all those losses and then park it green for the day, that's a 4% turnaround. That tells me tremendous buying pressure. That market is under accumulation now. It is not under distribution. Again, I have to caution you. I said this yesterday. 2 days doesn't make a trend, but now today's day three. 3 days of green closes, and it seems to me that if there were still a lot of institutions and individuals getting margin calls, forced redemptions, they would have had to sell into this so far. So far, so good. Where do we go from here? I know that's the million-dollar question, as always. I had a couple lines here on QQQ. I had to clear out. I was having a problem with the TC2000 program. Was really deleting all the annotations on my QQQ charts of all charts. So I deleted them all out, added a few lines back here. I guess since I did that, we had a nice little ramp here in the markets since I started doing that today, and we took out this level here. You can see we're coming up. I'll have to revisit the price targets on the previous QQQ trade. To do that, just so you know, what you have to do is go into when you're on the site. Let me show you here real quick. We're in the trading room right now. When you scroll down to the bottom, you can do enter symbol tags. If I go to QQQ, type it in. Oops, I didn't do it quick enough. If you don't do it fast, mess that one up. There it is. Okay, so you go in there, you can pull it up by QQQ, or you can go into the trade ideas right here, drop down, go to completed trades long, and you'll see it in there as well. But here it is down here, QQQ swing trade idea. So if you just reference the last QQQ swing trade idea, you'll see the charts that I had on the 60-minute chart. You can certainly, the targets there, you can certainly go by those targets. But let's just go back to the chart we're looking at right now. We'll start to get to some pretty good levels up here. And again, I want to say this. I'm trying to get this video out quickly. I haven't had time to really immerse myself in the charts since I've gotten home. It's nearly impossible to work off your phone, walking around the park with two kids and your wife and in-laws. So when I got back to the hotel room, I mean, if you guys have ever done park hopping in Orlando, 2 days of that, 12 plus hour days, you're just exhausted. So I didn't have time to really jump on the computer and study the charts at night. And I'll do that over the weekend. But I want to say up here is what I'm looking at now, at least in this area here, this zone around 157 or so, where we'll probably have a decent consolidation that could last for a couple days. So I do think there's a little more upside into next week, and that's why I added KRE back as an official trade today. Some of the things to look for too are Fibonacci retracements. When I got home, I added these here, and we were right at this 38.2. Let me move this one. I have Fibonacci clusters. So what I have here, the blue line shows you from this last major reaction high back here on December 3rd down to the recent lows. I have some Fibonacci retracement levels. We just took out the 38.2 today. We have the 50 coming up right here at about 158.25, and then the 60, which is where I favor right now, that 61.8. 161.78. I think we may work our way back up there in the coming weeks here on QQQ, and that's 161.77. Let me throw this other fib up. This is probably the more important of the two. I like to use multiple Fibonacci retracements, and then you look for what we call Fibonacci clusters, where you have there's a cluster, none really overlapping, at least on those two moves. And again, I may play around with this over the weekend. You can move the line to some of these other reaction highs. I like to work off the last major reaction high, and then of course the entire move down here. And again, we'll look at this. I don't see any that jump out on QQQ. Let's look at SPY real quick. And again, I'm trying to do this, sort of doing this video without spending a lot of time in the charts. I threw up these fibs on SPY as well from the initial move down to the lows right there. You can see. Tighten that up a little bit. And then that previous reaction high right there. And you can see a really nice fib cluster here. Let me highlight that for you. We have the 50% Fibonacci retracement from the move off the highs and the 61.8% retracement off this reaction high here, and they both come in right about here. So this is a very well defined. You can see there's price support there, or price, it was former support, now resistance, and those two Fibonacci levels that come in really close, in close proximity. And so I think that's a very logical target for this bounce. And again, we won't get straight there. There's going to be of course, there'll be some consolidation between now and then, and we may get that consolidation early next week. That would be a nice ABC corrective pattern, A up, B down, and then a C up there. We'll see. We'll see how that unfolds. I don't want to try to apply Elliott wave this early in the process, but either way, what does that give us? Right now, by the way, we're at the 38.2% retracement of this move down. You can see that line. And if we do get up to that fib cluster, you're talking roughly in the S&P 500 about another 4.5 to 5% or so. And let's just look at KRE. There's so much to look at, and again, I will do that over the weekend. I plan to pour through every major sector. I want to look at some of my favorites, which, before we even bottomed, I mentioned the financials, XLF. I went with KLE. It's a subsector. KRE. KRE are the regional banks, and I think there's a little more bang for your buck. I think they got hit much harder. I think they're going to snap back harder than XLF, which are the big banks and insurance companies. So that's why I went back into this one after having our stops clipped. The targets are the same. The same first target. I lowered the second target slightly after reviewing the charts. Decided to lower that, but that's still if we get there from where we added it on today, or roughly where we are now, you're talking about 9% if we get up to that second target. And I use about a 3-to-1 RR, about a 3% stop loss if we go down below 45 there. And we have nice bullish divergence on the RSI. They did take it out on the PPO, but when I look at some of the top sectors in KRE, or the top, not the top sectors, the top components, the largest banks. You have PNC, which is one of the largest in there, and you can see very strong divergence. And as you go through, I just see a lot of banks that have fallen to either some key support levels or are extremely oversold with divergences in place. So I do think there's some nice upside here, again, if this rally continues. Of course, IWM I should touch on, and then I'll wrap this up. I don't want this video to go too long, but there it is. We still had, again, the RSI divergence intact on IWM, extremely oversold. They took out the PPO divergence, but again, you had the RSI divergence. So I'm going to move that line, and you can just see the impulsive buying so far. And this former support zone up here, that would be an ideal target, I think, near-term swing target. Doesn't mean we can't go up more than that, but that's about another 7.5%. And again, some point next week, chances are we'll have a down day, consolidation, maybe a couple days, who knows. But today it looks like, unless something big happens before the close, we're looking at about the third green day. And so you can see, again, this is a market in distribution. This is a market in accumulation, and more so, if we can build on these gains, the higher we go up next week, it just shows that selling, at least for the near term, is washed out. And I think there's some, from a valuation perspective, again, I do think the economy will will slowly turn, and we'll be entering a recession sooner than later. But that doesn't happen overnight, and there's not a bear market out there. You can look at every one. There's not a bear market out there that goes straight down. They all have bear market rallies, and within those, within a bear market, some of those rallies last for many weeks, sometimes months. And so right now, like I said, just near term, that's what I'm looking at. Maybe we'll call it another 5% upside in the markets over the next few weeks. I think January would be a pretty good month overall. Unless we get up there quick, we could get up there mid-January, could get up there in a couple weeks, and then maybe the rally will be shorter in time than expected. But let's take it day by day. Again, I'm going to wrap this up here and go over the charts tonight and into the weekend, and I'll get back to all questions, comments, and chart requests at my earliest convenience. Thanks again for your patience, guys, and hope everybody is enjoying the holiday season. And I'll wish you a happy New Year in a couple days. I'll be around until then. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.